Welcome to Step 77, Investing in Gold and Other Commodities. So what you'll find is that most investors have their whole portfolios in stocks and bonds as we covered, but there's other investment options to consider if you'd like additional diversification for your portfolio. Once you get a little bit more into investing, you'll likely find that there's more about these other options, whether it's diversifying your portfolio, increasing returns, or simply learning more about the market that might interest you. So let's start with gold and commodities. Commodities, in a broad definition, are any raw material or primary agricultural product. The first thing to know is that you can invest in them just like a stock or a bond. And secondly, many companies rely on commodities. Oil companies, airlines rely on the price of oil, whereas other companies might rely on copper, grains, aluminum. And so really the two classes of commodities are soft commodities, be that wool, cotton, wheat, rice, and metals such as zinc, aluminum, copper, etc. Now, commodities are interesting, but primarily the one that interests me most is gold, and to a lesser degree silver. You see, people often treat gold as a store of value, and commodities that have this distinction often move in the opposite direction of the rest of the market. So they make an interesting addition to any portfolio, as they can provide some stability when the market moves a lot. Stated another way, when the market goes down, gold goes up. And then once prices in the market stabilize, gold starts to sell off. For proof of this, just look at the gold chart following the 2008 crash. Investors see gold as a very safe investment, which, unlike most company stocks and bonds, has been around for thousands of years and will definitely be around for many more. However, don't get too crazy about gold, as there's been long periods where prices were pretty flat or even went down consistently. Recently, in Q3 of 2019, gold and a lot of the other commodities which had risen in the previous months due to uncertainty in the larger markets started to sell off as the markets started to get under control, as trade war tensions started to ease. So it's up to you to be prudent about where the market's going and not try to time the market, but understand long-term where the macro data is heading. So next, let's talk about investing in cryptocurrency.